I'm happy to introduce you to our final speaker. With over a decade of helping SaaS founders successfully divest their businesses, FE International CEO Thomas Smale will share how to build a business that will attract potential buyers down the line. Thomas, welcome. We are eager to see what you have prepared for us today.
So, as you mentioned, my name's Thomas. I'm the founder and CEO of FE International. We're a mergers and acquisitions company that works with SaaS, e-commerce, content, service business owners. And we work with businesses all the way up to around $100 million in valuation. So today I'm going to talk a little bit about things you can do to make your business sellable, whether you have a SaaS company, an e-commerce business, a service business, a content company. And while they're the areas we specialize in, I think you can apply almost all of these concepts to any business you may have, even if it's not necessarily a fit for us. So I think one thing to think about if you're watching the presentation right now and you own a business, or maybe you're involved in a business as an investor or a key employee, so you're maybe like C-suite or someone who has shares in a business, regardless of whether or not you're thinking about selling your business now, at some stage you have to leave the business. And my aim, and as a company, our job is to help you sell that company rather than just walk away. When I started the business 10 years ago, there were not as many firms like us around, and many people would have a business, it'd be going well, for whatever reason, whether it's personal or otherwise, they would decide they could no longer run the business and it would just get shut down. There wasn't really a market to sell it. So my job and our job is to help you position your business where when you do have to leave your business, for whatever reason that might be, that's financially lucrative in the kind of form of a sale rather than just shutting it down. So 2020 and following on into 2021 was a record year for SaaS M&A. It was a record year for almost all M&A, but SaaS, particularly e-commerce, it was a really good year. So I guess going into this presentation, usually I don't talk to people about the best times to be selling, but if you own a business now and it's something you're thinking about selling, the market is definitely strong at the moment. There was approximately a 40% increase in deal volume versus 2019, which is quite significant. That's across all of the market. FE International saw a similar uplift as well. So there's a lot of demand out there, and that's really followed on into 2021 as well. Like we're nearly halfway through the year. It's just continued. There's more and more volume out there. Multiples have been improving. Deal terms have been improving. So again, if you're wondering about the best time to sell, market conditions are definitely strong at the moment. In our network of buyers alone, there's $20 billion of liquid capital available, which is obviously significant, and they are looking to buy all sorts of different businesses, whether it's $100,000 in valuation or $100 million in valuation. There's a lot of demand out there for all sorts of businesses. So that's a little bit about the macro and what's going on in the industry as a whole. And now I'm going to go into some specific things you should think about if you are within your business and you are considering selling at some point or you want to get out. And just a final point on some of the macro data. 40% of buyers I surveyed, I sent out a small survey last week to our buyer network while I was preparing the presentation. 47% of buyers are active at the moment and want to buy a business in H2, so the second half of 2021. So lots of activity, people wanting to deploy capital. So lesson one, when it comes to exit planning and thinking about selling a business, the first thing you need to think about is really what you're trying to achieve. Lots of people will look at kind of stories of, say, Instagram selling for $1 billion when it had no revenue. But what people don't really see is the thousands of businesses that sell every year that don't sell for billions of dollars. They're the ones you don't really hear about. There's not usually a huge amount of press about them. Companies like mine, we rely on events like this to get the word out about the industry. The big publications like Financial Times, Wall Street Journal, they're not talking about $1 million deals or $10 million deals. They're only interested in the large deals. But that doesn't mean there's not a market at that level. And what you want to achieve is very much a personal goal. And if you have investors or if you're an employee within a business, it's probably not just what you're trying to achieve. It's probably also what your peers and kind of fellow shareholders are wanting to achieve. But it's important to think about, and this will really change. It's entirely personal. There's no way I can tell you or anyone else can tell you what that answer should be. So some things to think about: if you own a business by yourself and it's a small business, maybe you want to buy a house, maybe you want to travel the world, maybe you just want to be able to spend more time with family. Maybe you have investors and you want to return a certain amount to investors. Maybe you want to build something much bigger. Maybe you want to build that $1 billion business. Again, there's no right or wrong answer, but what you plan and the things you do should be focused based on what you're trying to achieve. Because if you're trying to build $1 billion business, you'll need to do different things and plan differently to if you're just trying to build $1 million business. So it is important to think about this up front before you even do anything else. Lesson 2, and this is something in all businesses that's important to do if you're ever thinking about selling, because buyers really care. You have to test different strategies within your business. And again, I know the audience here is relatively broad, so you probably have a real wide range of businesses in the, I guess, general commerce space. So it's e-commerce, SaaS, service. I'm sure there's lots of you have lots of different things. Regardless of your business, you need to test different things. Because one of the first things any buyer will consider is what can they do to grow your business. So if they know what you've tried and what's worked well and what's not worked well, then that can help increase the value of your business and increase the number of people who might want to buy it, because they will realize that there's potential opportunity in areas you haven't tried, or maybe the things that do work in your business are something they know a particular amount about. So just some of the things you can think about here. If you have an e-commerce business, you can test different products. It could just be as simple as different colors, different sizes. Maybe you just need to sell something that your existing audience want to buy. Test different things within marketing. Make sure you track it so you have all of the data. If you can prove to a buyer that, for example, you have a Facebook ad strategy and it's working really well, but that buyer coming in happened to be an expert at Facebook ads, then if you have all of that data, maybe they'll be able to look through what you've done and realize that they have a huge amount of kind of potential and opportunity themselves that they can bring into their business that you can't. The next one is like very common with small businesses. I think as businesses get bigger, they get really good at this, but small businesses tend to be quite bad at it. It's testing different pricing. In my experience, almost all small businesses price their products too low. They never charge enough. So test pricing. Generally, I would say a good thing to try is increasing pricing to see what that does to demand, but it will really depend on your business, which is why it's important that this is a test. It's not just generic advice. You can't just increase your prices and expect to make more. In some businesses that will work well, in others it won't work at all. So test it, keep the data, and that will help with buyers and it will help the desirability of your business. Particularly if you have a small company, and I guess this applies to any kind of business, really, is if you find something that's working and working well within your business, double down on it. Probably one of the most important drivers of valuation within a business is how much it's growing and how much it's making. So if you are finding things within your business which are working, keep doing them. It will improve your growth rate. And when it comes to finding a buyer, whether you're working with a firm like us, it makes our job easier, whether you're trying to sell the business yourself or whether you're going down a different path. There's lots of different ways to do it. And I'm not here to sell you on working with FE International today. There are lots of different ways to do it. But double down, keep tracking what's working, track what's not working. And I think one mistake that a lot of business owners make, or people within businesses, is just because something's working now doesn't mean it will always work. So if you have the opportunity to double down on it, then you really should, because you don't necessarily know that that's going to happen forever. And then overall, whatever you're doing, you need to track everything. As I mentioned at the start of this slide, buyers want to look at data. They want to understand your business. They understand what your pain points are, what's good and bad about the business. It's going to help them make a decision, and it will ultimately make it more sellable. And back to one of my very original points at the start of the presentation, at some stage you're going to have to leave your business, but chances are all of you listening right now, you're probably not thinking about selling a business tomorrow, which is absolutely fine, but you still need to be in a position where you could sell if you need to. Often people sell when they don't necessarily know they need to. Maybe there's a change in personal circumstances. Maybe there's a change with investors. Maybe the business partners fall out. There can be lots of different things that happen, which you don't necessarily expect. So if you're tracking everything as you go, you're growing as much as you can. This is just going to help your business regardless of if you're selling or not. So none of the things I've really been talking about are things that you should only do if you're thinking about selling. The things that all businesses should do regardless of whether you're thinking about selling. One of the most important things with the majority of businesses, if you want to sell them, is to make sure the business is sustainable. One of the most important things that any buyer is understanding whether or not they'll be able to keep growing your business. So we spoke previously about if you find things that are working, double down, track them, show what's worked, show what's not worked. But you also need to make sure it's sustainable. No one wants to buy a business which has had like one really good year and then the next year it's going to halve in revenue or halve in profit, or all the team are going to quit or anything like that. So think about what you can do to make your business sustainable. Some practical things you can do here. Again, this really depends on the size of your business. If you're listening right now and you're just a team of one, or maybe there's you and a partner, or maybe a couple of partners, think about hiring people. The sooner you can hire people, the easier it is to scale, the more desirable your business is to acquire. Generally speaking, buyers want to buy a business which has a team so they can take over and work with the existing team. If it's just you working by yourself, chances are the business is going to be difficult to sell, because the buyer would then, because by its very nature, need or want to work with you as a seller, which somewhat defeats the purpose of selling in the first place. So hire people when you can. They don't necessarily have to be full-time employees. You can hire contractors, even hire agencies, freelancers, whatever that might be. But you can make your business sustainable by kind of creating processes around the things that have been working well, and then hiring people to do those things. And again, whether you're selling your business or not, if you can learn and understand how to hire people and how to manage people, then you'll have a successful business now, and any future businesses you build or launch or try to grow will be much easier. And even if you decide not to sell your business, ultimately you can build a much bigger business than you could otherwise. And I would say almost any business owner I know in the $10 million to $100 million revenue range, which I'm sure some of you are at, it's around the level FE International is at the moment. Almost every single one of those people will tell you that the hardest thing within their business is hiring, retention, training, anything to do with people. So it's really difficult, doesn't necessarily get easier, but if you can figure it out, even if you're just hiring a few people, it will really help with your business being sellable. Like I said, even if you're not planning on selling it, that can also work well as well. Within your business, particularly if you're planning on selling it at some stage, and this isn't necessarily for everyone. Some people listening, if you're a freelancer and you're happy just with a one-person business and just selling hours or selling time, that's absolutely fine. Again, back to the start, you have to decide what you're trying to achieve. It's not what I'm trying to achieve or your bank manager or financial advisor is trying to achieve. It's very personal. But if you are trying to build a business that can be at some stage sold and you're hiring people, then within your business, you need to create a culture of growth. So that means tracking things that lead to growth. So it could just be as simple as, are you getting more leads every month? Are you getting more traffic to your website every month? Are you being featured on more podcasts every month? Again, every business varies. There's not really a right or wrong way to do this, but track what metrics matter within your business, and then create targets which the team can work towards. In my experience, most employees of a business want to work in a company that's exciting and growing. That doesn't mean you need to be quadrupling your business every year, but having growth goals is, I think, a healthy culture to build. And this is exactly what buyers are looking for as well. So if you have a team that know what they have to achieve, they're focusing on growing, then they will be more likely to do that. And it'd be much easier to find a buyer who kind of aligns with what you're trying to achieve, and they understand exactly what can be done and what can't be done with the existing team. My suggestion, and this is something I would say comes up a lot with business owners, like big and small. I think most businesses focus on too many metrics. They'll find 30 or 40 different metrics they can track within their business, and they'll track every single one. Doesn't necessarily mean you shouldn't track all of these metrics, but you need to figure out what the most important metrics are within your business. And again, I can't tell you what that metric is, and neither can anyone else. You need to figure it out for yourself. I'll tell you, in most businesses, revenue is probably the most important metric. And if you're trying to build a business that can be sold, ultimately your revenue and revenue growth rate are important. From there, some form of metric around profitability is important to track and think about. But this will really vary depending on your business. If you have a small, high margin software business, then maybe profitability will be less of a concern. If you have a e-commerce business where you're selling products at a 25% gross margin, then you absolutely need to think about your margins all the time and have target margins, whether that's a margin you try and maintain or whether you're trying to improve margins. Again, there's not really a right or wrong way to do it, but focus is important. When you're speaking to buyers, and when you're thinking about selling a business, whether you're talking to investors, whatever it might be, they want an understanding of what metrics are important to you, what you're tracking, and how they're going to grow over time. If you show someone 50 different metrics you're tracking, then all it really shows is there's a lack of focus. It's not going to help your team because they're not going to know what to focus on day to day. It's not going to help you as a manager or a leader, CEO, whatever your title might be. Because if you don't know what to focus on and what's important, then your team won't either. So in my experience, if you focus on around 5 metrics, that can be 3, that can be 7. Again, that's not exactly 5. You can do that. It will help create a culture of growth because your team will know what's important and they'll be empowered to make decisions that help you around those goals. It will help you hire people because when you're interviewing people, you will know very clearly what your success metrics are. And you'll also help find people who align with your culture. You could find 10 really good people, but 5 of them might not necessarily agree with your general approach to business and the things you care about. Some people don't want to work in a business that's growing. Other people do. Generally, to work in a growing company, you have to be willing to make sacrifices, like particularly personal sacrifices. And that's not for everyone. So unless you're very clear with what you're trying to achieve and the growth you're trying to achieve, then it's going to be very difficult to hire people because you can't set clear expectations up front. In any business, and again, this is very much a relevant point whether you are just starting out and thinking about selling a business in the future, whether you're a freelancer never thinking about selling a business, or whether you want to sell your company literally tomorrow, creating consistent cash flow is essential. The vast majority of investors and buyers are looking for businesses which are consistently generating positive cash flow. So some of the things you can do to achieve that, probably one of the most common mistakes I see businesses making, and this is a problem I have within my own business, it's something we think about every single year, is getting customers coming back. It sounds really simple, and quite honestly it is. It's as simple as one of the hardest things in marketing is persuading someone to work with you for the very first time. Whether that's you have a service and you're selling them a service, whether you have a product and you're selling them a product, whether you have a SaaS business and they're signing up for a subscription. The most important thing to do is make sure those people come back. So once you've sold to them once, it's much, much easier to sell to that person again if they like you and your product. So in the vast majority of businesses, that just means emailing them consistently. That can all be automated. There are plenty of tools out there to help you automate emailing people. It could be calling them, depending on the value of your service. At FE International, the average fee we make from a client is usually in the 5 or 6 figures range. So with us, sometimes it makes sense to go meet people in person, make phone calls. In your business, you might be selling a product for $25. If it's $25, probably doesn't make sense to call. But there are lots of different ways you can do it. So that could be automated emails. That can be more personalized one-on-one emails. Again, this will vary depending on your business. If you have customers, then an easy way to make more money, and this sounds really obvious, is just sell more to the existing people. So sell them a different product, sell them the same product, get them to refer their friends, family, other businesses to you. There's nothing people like more than referring kind of products and services to their friends, family, or whatever it might be. So make it easy for them to do that, make it easy for them to share. If you have an e-commerce business, maybe that's discount coupons, lots of different things. The next and the final point here is you have to focus on what's profitable within your business. That doesn't mean that every single last thing you do within your business has to be profitable, but you need to think about what parts of your business is profitable and what's not. So if you're tracking the data like we spoke about in the last slide, this should be quite easy to do. And then once you can focus on what is profitable, then it will definitely help figure out what you should continue doing and do more of. Generally speaking, customers who've worked with you before are going to be the most profitable because you don't have to pay to acquire them again. So let's say you have a business where you sell a product for $1,000 and it costs you $250 to acquire that customer. Then if you have found them once, you paid the $250. If you then want to sell them something again, it will cost you nothing or close to nothing to do that. So instead of paying $250, you pay nothing. So the most profitable customers are the ones you've already sold to before. I think a lot of people forget about this, particularly in marketing. It's really easy to spend all your time focusing on finding new customers and not enough time spent on existing customers. And you don't need a sales team. You don't need anything particularly fancy or complex. Sometimes it's just as simple as calling or emailing people. You can even automate emails. Again, your business will vary. There's not a right or wrong way of doing it. But if people like you, they'll be happy to buy from you again. They'll be happy to refer you. So one of the most, I wanted to get this in here because one of the most common questions I get is, what are businesses worth and how much do they sell for? So just at a very high level, I'm not going to spend very long on this slide, but I just wanted to talk a little bit about at FE International how we value businesses. So we look at every single time we sell a business, and over the last 10 years, we've sold over 1,000 businesses now. We track lots of different data. So back to one of my earlier slides about tracking data and metrics within your business, an important one for us is data from past clients and what we can learn from that. We take all of the data points from past deals, and then when we sell a business or we're looking at valuing a business, we establish what it's worth based on that past data we have. So the vast majority of businesses below $100 million are sold on a multiple of seller discretionary earnings. And without going into a super technical explanation, that's effectively the net profit of your business, not including what the founders or owners of the business pay themselves. So if you have a business that makes $1 million in revenue and $200,000 in net profit, but you as a founder are paying yourself, say, $100,000, then that would get adjusted to 300,000, and then we apply a multiple from there. There are exceptions to this rule, but the vast majority of businesses are sold based on these metrics. I know people listening have a real range of different businesses, so just going through some of the business models we focus on. If you have a SaaS company that's worth generally more than $2 million, you're looking at a 6 to 10 times annual multiple. If you have a business worth below $2 million, it's going to be a 4 to 6 times multiple. And the reason that changes is generally as a business gets bigger, multiples get higher. Hence why when you hear about big public companies selling, the multiples are often much bigger than you hear about with smaller companies. But while you might hear about public companies selling for 20 times profit, that's not the case for companies making $1 million a year in profit. That's companies that are making $100 million. Content businesses generally sell for around 2.5 to 4 times annual STE. So that's things like blogs, any business that's primarily driven by content, ads, affiliate. E-commerce businesses can sell anywhere between 2.5 to 5 times annual STE, and FBA or Amazon FBA businesses in the 3 to 5 times annual STE. And like I mentioned by the start, there are more buyers in the industry at the moment. Multiples are improving. So it's definitely a good time to sell in the industry at a whole, like regardless of where your business is at right now. So just to summarize before we go into some questions, key takeaways. So start with what you want to achieve. Again, there's no right or wrong answer. You need to figure out what's important to you and what matters to you. When you figure out things that are working, double down. So if it's working now, keep doing it. If you find a cheap way to acquire new customers, then spend as much as you can possibly afford to keep acquiring customers through that channel, because chances are it won't last forever. And ultimately, people looking to buy a business care about growth. Growth is always one of the most important metrics. So if you find things that are working, keep doing it. Focus on getting customers coming back. It's really simple to do. So many people forget about it, particularly if you're a marketer. It's really easy to spend all your time focusing on new customers and not enough time spent on people who already know and already like you and you've already spent to reach and acquire them as customers in the first place. If you are actually thinking about selling a business while it is growing is the best time. Too many people leave it until it's too late, and then it's going to be difficult to sell. If a business has grown and then starts declining, not necessarily impossible to sell, but it's going to be much more difficult than not. And ultimately, regardless of where you are in your journey, it's important to have an understanding of what your business is worth. So companies like us at FE International, we offer free valuations to anybody. There's no charge for that service at all. We'll go through, tell you what your business is worth, and that will help you understand what you want to achieve. If you got a valuation tomorrow that said your company's worth $1 million and you would like to achieve $2 million as a sale price, then the advice and the things you might need to do in your business will be completely different from if you're trying to get to a $1 billion valuation. So get an understanding of what your business is worth, and that will definitely help. So I have a free report for anyone who's interested in the market and some data behind it. If you go to this URL, you can download our market report, which will tell you what happened in the industry in 2020. We're in the process of updating this with a little bit more data from 2021 as well. But as I mentioned at the start, it's been a good year so far, and 2020 was a really good year for M&A as well. So if you do want to learn a little bit more, said, I've made this free for all attendees to download. I'm going to paste it in the chat now if that'll work. But it looks like that won't work, but I can send it around later if anyone needs it. So feel free to send me a message. At the bottom of each of the slides, I've left my Twitter handle. So if anyone wants to reach out, then I'm happy to help. So thanks very much. Looks like we're 30 minutes is up for the talk itself. So I think we have a little bit of time for questions.
Your timing was absolutely perfect, Thomas. Appreciate that. Thank you very much. Yeah, great session. So we do have some questions, and actually one I'm kind of fascinated by myself, which is starting a company with exit in mind. Is that a good idea? Because surely it will move the focus from the client to the money, and will it help the business?
I think when you're very first starting, it is important to think about, well, so if you think about what you're trying to achieve, that may well be an exit. So it is important to think about it. When on literally day one of your business, I'd say the most important thing to do is focus on actually growing a business and actually generating revenue. Ultimately, if you come to us and your business is making zero, but you have a really good plan you've came up with about how to sell it and how to make it sellable, that's not really going to help. So day one, you just need to focus on revenue, finding product market fit, growing a business. And then as you grow, you need to start thinking about what's possible. Like personally within my own business, when I started 10 years ago, I didn't really know what I was doing. I didn't have any money, didn't have any contacts. It was just me. So at the time I thought, oh, if I can make 100,000 a year, that would be more money than I've ever seen before. And that would be amazing. But now we're at the stage where our revenue is over $10 million. We have a team of nearly 90 people. So goals and what can be achieved has definitely changed with time. So don't be afraid to change that goal as it goes. But at the start, don't think about it too much. But once you start growing, you definitely should, because that will definitely change how you approach things. It might mean if you want to grow $1 billion business, you probably have to work harder and make more sacrifice than if you want to grow $1 million business. So again, there's not a right or wrong way to do it, but think about it early, and I think that will help.
Okay, and so I think the next question then probably you were just alluding to, when should somebody start to think about exiting? When should they come and approach somebody like you?
So when your business is growing, and I think when you're at the stage where you reach maybe a crossroads in your business, so whether you've got to a stage where you might have stopped growing, often, particularly if you have a smaller business, lots of people we work with have multiple companies. So maybe you're running 2 products and maybe you're realizing that one is not growing as much as the other. And for one to grow, you need to focus. So often it might just be from a focus perspective. Sometimes it's more personal. Often we work with people who they want to buy a house, they want to go to college, maybe they've just had kids and they want to spend some time with their family, maybe they want to retire. So it can be a personal time. I'd say it's never too early to have a conversation about valuation and getting an understanding of what you're worth. And then ultimately the decision is personal. So if I tell you a business is worth $10 million, to some people, $10 million might be enough. And they might say, wow, I'd love to sell now. And other people might say, no, I want $100 million. So they'll keep working. So think about it early, but it's never too early to at least have a discussion. If you call us or reach out to us about getting a valuation, there's no obligation. There's no reason why you have to commit to any process.
Well, and it could guide them, couldn't it? I mean, you could give them a valuation, they might have a figure in mind, and then they'll sort of know what to do to get there.
Yeah, that's exactly right. Because like I said, if you're at 10 million and you want to get to $1 billion versus 10 million, you want to get to 15 million, chances are you're going to need to do some different things. If you just want to get to 15 million, you probably just need to keep doing more of what you're doing. I mentioned like double down. That's going to help you get where you need to, versus if you're trying to get to a larger valuation, you might need to fundamentally change something within the business.
Okay, so we have another question, which again is quite interesting and sort of leads on, but what is the biggest mistake first-time sellers make? And if you have any examples without obviously naming names.
Yeah, I think that the biggest mistake we see on an ongoing basis is people who just think about it way too late. So they'll think about selling their business once it's already started to decline, and they wouldn't have planned at all about what they're trying to achieve. So that maybe their business was worth more the year before, and they come to us and they kind of can't get around the fact that the business is now worth half because the business has declined for whatever reason. And obviously it's great while your business is growing, but not all businesses grow forever. If they did, I guess it would be easy, and companies like FE International would not need to exist, because if you're always growing, you don't necessarily need to sell. But yeah, the most common mistake people make is just thinking about it too late and not planning, and maybe hearing presentations like this right now and thinking, oh, well, I'm not selling my business. I don't care about selling, so I'm not going to take home any of the lessons. So you don't need to sell or even do anything about selling right now. But if you take away at least a few things, just go through the takeaways I had, the key takeaways, because they should apply to you whatever stage you are in your business, whether you're selling tomorrow or not.
Okay, and I think we've got one final question, and I mean, you did speak about this a little bit in the presentation, but the most essential metrics SaaS founders should be tracking if they want to be attractive to potential buyers. Yeah,
so it was a SaaS business specifically. I'd say so revenue and relevant revenue growth is important. Revenue churn is probably the second most important metric. Particularly if you have expansion revenue in there. So for those of you who don't know, expansion revenue would be making more revenue from your existing customers. So if you have a per seat based model and you have a customer that goes from 1 seat to 10, then they're probably paying you 10 times more. So revenue churn is important. Depending if you're spending on marketing, your CAC to LTV ratio, so cost of acquisition and lifetime value. So how much it is costing you to acquire a customer. So I think I used the example in the presentation of spending $250 to acquire someone who spends $1,000. In SaaS, it's not necessarily what they're paying monthly. If the lifetime is $1,000, then spending $250 is profitable. So understanding those metrics. There are lots of other metrics as well, but they will really depend on the type of SaaS business you have. For example, if you don't have expansion revenue, that's fine. Maybe then customer churn also becomes relevant. Maybe people care about ARPU, but it will depend. Whereas you could be an enterprise business with 10 subscribers paying you $10 million a year. The metrics there are completely different from having, say, 10,000 people paying you $10 a month. Like both businesses, but they're just different the way you look at it. So that's where I guess the value add of firms like us exists, because I can't give a generic answer to that during a presentation. We can do once we do business, and that's, I guess, what we do free. For us, that's just part of our marketing expense, effectively. So for whoever asks this question, happy to talk in private if you've got specific questions.
Oh, great. Okay, well, we've posted the link into the chat, so everyone should have that, and they'll be able to get a hold of you. So appreciate that. Okay, well, I think we've gone through all of the questions, so very much appreciate you taking the time to talk to us today. So thanks for a great session.